I'm going to get knocked out of this trade, it looks like. I'm in at 103.40, and it's 10, almost 106. So if I get knocked out, I'll only get 250 on that one. Boom! Whoop, whoop. All right, so let's see. I don't want to stare at this. Let's go somewhere else. And then, of course, let's go through the routine. So it is Thursday. It's the 23rd of April. That doesn't make any sense. No, it's 23rd of June. Holy smokes. Basically halfway through the year, huh? And today is the day for Brexit, the big vote. Yeah. That means there's some opportunities to make some money in the market. I'm okay by that. So without further ado, let's get ready for another awesome. Ready. So welcome. Now let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay. Been trading Forex for 12, 14, 19, 247 years. Somewhere in between there. Yeah. And I'm here to share my experiences with you with the overriding goal of helping you become a better trader more quickly, so that you don't have to go through the blood, sweat, and tears for years just to simply get to mediocrity. Who wants that, right? Clive says, yeah, Wayne, do you adjust the routine compared to NFB? I'm not sure if I follow. Maybe I'm missing. So anyways, let me finish this. We do these sessions every single day, Monday through Thursday here at Forex.Today at 7:30 in the morning, New York time. That's approximately London lunch. Every Friday at FX Street for premium members only. And FX Street has awarded me Forex Speaker of the Year. So I hope to see you over there. I guess that's tomorrow. Huh? Quick update. Let's realign our satellites. Japanese manufacturing data was horrible. Horrible. That's awesome. Why is that awesome? Because it kind of forces the government and or the central bank to do something. Now, should we care about manufacturing data when it comes to Japan? Well, I think they wake up with the purpose of manufacturing something. So that ain't happening. Right? So very bad, right? They got no orders coming in, right? Inventories on the rise. If inventories are high, why do you need to make new stuff, right? New orders not coming in, right? No new orders, and inventories are building up. And by the way, anything below 50 means your ship is sinking. Is literally what it means. If the number is below 50, your ship is actually taking on water. Now, you might not drown today or tomorrow, but eventually it's going to start listing, and you should, look for some life rafts, right? So anyways, so that ain't going very well. And then there was some commentary, noted the sharp drop in international demand. aka Europe is choking on its own blood. Thank you, Europe. Hey, maybe France will save Japan. I'll strike on that. And when we strike, we're going on holidays. And when we get back from holidays, we'll strike. Hollande has a popularity of 14%. Hey, you voted for him. We. So anyways, yeah. So how about, why don't you jack up taxes well over 50%, stifle your whole economy with unnecessary red tape? Oh, wait, they already did that. Well, why don't you undo all of that and try the exact opposite, right? So again, I think some of this, where you, again, think of how Germany is running its economy, right? Cut debt, cut debt, cut debt. Don't spend a penny on anything. Just slash your debt. France, I don't know, wake up, go to work maybe, maybe not, I don't know, but no one can fire me, it doesn't matter. All right? And then you got the UK, trying to maintain its center of the financial world. So there's like three radical things going on. No, and who knows about like Greece, Spain, Italy, right? Portugal. Who knows what the pigs are doing, right? So it's just, wow, what a complicated mess it is, right? So we get that point, but yeah, so it's starting to be felt all over the world. And remember, I said the key to save China, which is the same key to save Korea and Japan, the key to save China, which is also the key to saving Australia and Canada and Brazil and so on and so forth. The key to saving China is saving Europe, and Europe can't save itself. Sorry. So anyway, so Japan is finding that there's a sharp drop in international demand. And of course, the earthquake in April didn't help anything. Okay. Employment growth now at the worst in almost a year. So therefore, you would guess that sometime soon, maybe the government was going to do something. Save me, government! Save me! One of the things I'm studying right now is the history of economic indicators. And even just 50 years ago in the United States, we didn't even really, there wasn't GDP 50, 60, 70 years ago. If you go back to, let's say, 100 years ago, so let's say in the 1920s, okay, right before, in 1920, by the way, I think it was 1921, there was a sharp economic crash. And then things stabilized, right? And then, of course, we know the 30s, there was a sharp crash. Back then, there was no GDP. Statistic. It's like, why would the government track that? I mean, unemployment, why? Is that a problem? Who's to say the government should save you? You don't have well, what does that have to do with the government? It was interesting. It just how things have changed, right? Now, what they were kind of concerned about, later on down the road was more like, how are workers being treated, right? Because unions were being formed and all that kind of stuff, right? But like, you didn't have a job, what does that have to do with the government? Well, how about GDP? Because that's growth, right? We're looking at the growth of the economy, but like, what does that have to do with the government? Remember, there was no central bank either, right? So it's like, well, look, we're going to build roads and schools and stuff like that, but like, you don't have a job, why should I care? I'm just your president. Why don't you go find some work, right? So it's just interesting now. It's like, oh my God, everybody has to worry about everybody, right? Oh my gosh, did you see did you look, we're looking at manufacturing PMI data. 50 years ago, who cares? What does that have to do with anything? You're only tracking it to find out where the economy's going, but like, why should the government care about the economy, right? So now we're like, so in our modern world, oh, that news was horrible. 47.8 is just pathetic, and it looks like things are going to get worse before they get better. So save me, government, save me. And that's what we're thinking. So that's really good news for foreign exchange traders, because if the government's going to go, the Japanese government's going to go in and save the Japanese, which is kind of funny because it's the stupid Europeans that are screwing everything up. It's nothing to do with Japan. I mean, yeah, they got to get some fiscal stimulus going and clean up their political mess, but everyone's got to clean up their political mess, right? And you know that ain't going to happen. So now, anyways, I guess Japan is going to, like, I don't know, save everybody and weaken their currency further. And that's what we like. So that's why you see, like, the Japanese yen is super weak today, because things are so bad that maybe now the government has to do something. And this is sort of the disconnect that a lot of amateur traders get. They're like, well, if that's bad, that means the stock market's going to come down. No, the stock market's going to go up. And then 6 months from now, we'll have bad news, and the stock market will crash. And you'll say, well, Wayne, what's the difference? I'm like, oh, the context of the situation is different. So sometimes good news is good, sometimes good news is bad. Sometimes bad news is good, and sometimes bad news is bad. It all depends on the context. And if you're like, well, Wayne, that's super confusing. Yeah, well, that's why this is a difficult business. This is why it takes, blood, sweat, and tears for years, so that you can learn these little nuances. Are you going to get it in your first day? Probably not. Wayne, I've been trading Forex for over 3 months and I'm still not rich. Fred says, if I was a politician, I would blah, 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 right? Yeah, one of the things I'm reading, because again, I'm in college. Don't you love these things? I'm reading Machiavelli, his political essays from 1504. 1504! Holy smokes. Yeah, it's one of these things like, yeah, just go ahead and read, these 250 pages, and oh, by the way, get it done by tomorrow. But you know what's amazing about it? We're talking about the same time as Leonardo da Vinci. That's how old this stuff is. And it's fascinatingly appropriate for right now, and has always been. And the eloquence in which it's written is amazingly modern. To think that, physics hasn't been invented yet. In fact, most math, I don't think, we didn't even understand gravity, Wow, a lot of things have happened since 1504. Right? But the amazing thing is, it was like the guy just wrote it today. Very, very fascinating stuff. So again, I think humans were a lot smarter than we give our own selves credit for. And imagine 3,000 years ago, I bet you we were a lot smarter than we think. So anyways, fascinating stuff. But anyways, Fred says, if I was a politician, yeah, well, so that's what Machiavelli is all about, how to be a politician, which means to know how to be a good man, you need to be a bad man. And then, of course, because you know how to be bad and you want to be good, you can avoid the bad and be good. But when you need to be bad, you know how to be bad well. It's fascinating stuff. So you'd never elect a good man for president, because he won't know how to be bad when he needs to be bad. Hey, Goliath, I could repeat that, but then, it requires an entire paper. Don't worry, I'll be writing one. All right, so anyways, European session, business confidence, 100. Oh, well, there you go. I take it all back, France. I'm sorry. French PMI, 47.9, 4 months in a row of Hey, well, maybe that has to do with, strikes. German PMI. See? So, like, the economy in Germany may not be great, and maybe I don't completely agree with their fiscal or monetary policies, but at least they get up in the morning, go to work, and work hard, right? I like picking on the French. Why not? When I get to the factory, I don't know, but I will get there eventually. I will work 20, 30 minutes. I will smoke, I drink wine, and then maybe I work 20, 30. But I don't know, I get some Greek in there with me. But anyways, it's pretty funny. Yeah, eat some cheese, a baguette. You call that baguette? Yeah. Anyways, funny stuff. All right, so the Norwegians leave interest rates the same. Good way, Norway. Apparently, Norway likes the fact that oil's gone up from $25 a barrel to $50 a barrel. Good job, boy, Norway. Boom. Did you know the French eat like 40% less baguettes than they used to? Eurozone PMI, 52.6. So you look at this. We're getting 52.6, 54.4, and then you look at France, 47.9, trending down. Not good, right? So anyways, we got Brexit today. So we'll know 2 a.m. New York time. What's going on, eh? Be careful. That's all I can say is I wouldn't have any trades really. If I were you, I wouldn't have any trades on the books going into that because I don't know, who knows? And that's the thing. I don't know. Who knows? I have seen things over my foreign exchange lifetime, which is, when you add it up in hours, is a lot of hours. And I have seen the markets move hundreds and hundreds of pips in a second. It's called gapping. Because the market actually freezes up in this situation. It's not the broker, it's not TradersWay having a problem. It's literally the interbanking system stops working. Because the banks are not doing anything. They freeze, and they freeze meaning not like the computers glitch, but like everyone's standing in a room. It's like looking at a pit. That's what the foreign exchange interbanking market is. It's like an open outcry pit of banks all around the world stationed, right? And all of a sudden, the news comes out and everyone just freezes and does nothing. And they're just looking at each other like, dude, I don't know. And because of that, the only people in the game are those that are willing to sell super high or buy super low, and that's the spread. And all of a sudden, you got this real big problem. And if you're in the market, you could have a 300 pip gap instantly. Meaning you're like, well, Wayne, I don't mind going into this, this news event because I have a stop loss. Oh, really? Where's your stop loss? 50 pips away. No, I wouldn't consider that a stop loss. 150 pips. You know what? You may have a trade that's 100 with 150 pips stop, and it may not be enough. What if it gaps 300? Okay, and let's say you're going into that event. Let's say you're already down 50 pips, and you're like, well, I still got 100 pips before I hit my stop. All of a sudden, you could be 350 pips in the hole. And stuff has happened similar to that to me over the years in various situations. And one time that I've spoken about a lot that I do remember, and this must have been, I don't know, 8 years, 6 years ago. I don't know, a long time ago. And I remember I thought I was in good trades. I had 3 or 4 or 5 or 7 or 8. I can't remember how many trades I was in, but they were all good and they were all profitable. and I had to stop at break even on all of them. And my question was, am I going to make 150 or 200 pips each? And I was carrying it over the weekend. And anyways, something happened over the weekend. I don't remember, but some big event. And I thought for sure it was going to go my way. Sort of like how today's Japanese news was really bad. So you say to yourself, oh, that's really bad. The Nikkei is going to crash. The Japanese yen is going to get really strong, right? Just imagine that happened over the weekend. That's what a basic assumption would be. The bad news is bad. So I'm like, oh, well, I got the news, and the news went my way, right? So I'm like, that's going to be really good for me. I got all these trades are at break even, totally safe, right? Everything's good. I get to my computer Sunday afternoon, and I'm waiting for the rollover for the markets to open, and I'm salivating. I'm like, man, I could be up 800 pips. I could be up 1,500 pips. I can't wait to find out what happens, right? And it opened, and it gapped over top of my stops. It went the exact opposite way, and all of a sudden I'm like, holy crap, I'm down 1,000 pips. I was down like 1,300 pips negative, even though I had stop losses at break even. Bow! And the reason that happens is because there's a gap, your stops are never touched. Price has to touch your stop to execute. Well, no, just whoop. And all of a sudden, if I was lucky, it would go up and hit my stop, right? So, I'm telling you, even if you have a 100 pip stop, even if your trade's profitable plus 100 and your stop's at break even, you're like, I can go in and Brexit, hero or zero. No. For a few minutes, we could have a completely dysfunctional global interbanking market. Okay. So, if I were you, I would wait for, the news to come through. I'd let it probably do the first move on the 5-minute or something, and then tiptoe in, and then use your stop and be prepared to have all kinds of reactions and counter, attacks and counterattacks and and so on and so forth. Use your stop. Don't keep it too close, so therefore cut your lot size. And you can do a lot of trades tomorrow after the news, after any volatility kicks in. But remember, the minutes before and the minutes after your the news, spreads, like I said, spreads can widen in the interbank system. Okay? And this can create all kinds of things. First of all, I've seen on other brokers, not TradersWay, but I've seen on other brokers where right before news events, even the Euro USD would, for 1 second, have a spread of 30 pips. So imagine you're like, man, I got a 25 pip stop. I don't want to risk much on this little scalp. And then boom, you're out. You're like, I'm out, but why am I out? How did I just lose 25 pips? I thought I was only down 3. Well, stupid is as stupid does. You took a risk, and think about it this way. You took a risk when no one else in the entire world was that stupid. You're like, oh my God, right there, I was the worst trader in the entire world. Boom! Nailed that. Whoa! Now I stand out. Now I'm special. They love me. They really love me, right? No, dude, you just traded when the spread was 30 pips. Well, why was the spread 30 pips? Because the market was dysfunctional, and all these, banks and professional traders that are trading trillions of dollars, they're looking at each other like, I ain't going to make that move. I ain't going to make that move. And then suddenly, boom, you're in. You're like, oh yeah, I'll put that in. Boom, that's me. Dude, you're holding a 2-9 offsuit. You're going all in. Really? Right? So I'm just saying, look. Let's change the discussion from negative to positive. You want to be a professional one day. Why don't we make that today? Pretend in your mind you have $5 million. You know what, actually, really when you look at different funds and stuff like that and the way things are categorized, you either have 10 million or you have less than 10 million. So let's say you have $10 million. Okay? Right? If you lose 2%, I'm going to be upset. If you lose 20%, I'm going to bury you in the sand dunes somewhere in between Dubai and Abu Dhabi. Yeah, I'm like, hey, it's going to be fun. Let's go out in the sand dunes. Yeah, it's going to be fun. Whack! Right? Yeah. That's what happens, right? So, and I should probably get off this. Look, we got some news coming up. Yeah, PMI here. Great, new housing. By the way, this is Ripper good. The numbers in the new housing is good. So, anyways, don't worry about that. It's all good. Okay. So, all right. Literally, I'm telling you, this is the day to change everything. Okay? Pretend you have $10 million in your account and it's not your money. Okay? No more fun and games here. You have to do your job. Number 1 rule, don't lose money. Number 2 rule, never forget rule number 1. Number 3, make money with as little risk as possible. And risk will be measured because usually risk when you're looking at portfolios will be based on volatility in your portfolio. All right? Because no one's looking at each individual trade unless they're looking at lot size. Because one thing when I analyze traders, I'm like, oh, well, look at your trading. You're up so much, 30% this year. That looks good. And I find out you made 20% on one trade. You're fired. Okay? So, we're going to look at volatility and stuff like that, right? So today, you're trading $10 million of other people's money. You're worried about, you're going to be rewarded by your profit, punished for the risk. You're not allowed to lose. So, we don't even need to talk about that. You lose money, you're fired. I don't care if 10 months in a row you're profitable, your clients love you. On month 11 you lose money, you're fired. They hate your guts. So anyways, never lose. That's assumed. Volatility is bad. You're going to be rewarded from the profits. So you need to make money, but not at the consequence of risk. How are you going to behave today and tomorrow? Alex, Alex wasn't sure if there'd be volatility today or tonight. So there's 2 schools of thought here. One, that humans are like machines. Okay? They only buy things at the logical correct price, and if the logical correct price isn't there, it doesn't happen. Okay? Or 2, humans are not like machines. They make mistakes, or they also get emotional. And they do things because they think, whatever, because of some logic, what they think is a logical, or maybe it's an emotional thing like greed and fear. Okay? So, for those that think humans are machines, here's a great example I heard of. Think of a desirable part of town or some desirable city in which you think you would like to live. Because it's desirable, do you think prices are going to be higher, let's say, in the next 5 years? Let's say 10% higher in the next 5 years, maybe 20%? Yeah, okay, great. No, absolutely not. Because if that were true, everyone would be buying the houses now. So, wrong. Because if everyone thought prices were going to go up for 10 or 20%, they would just buy them today. So there wouldn't be the opportunity to make that 10 or 20%. And that's this idea of efficient markets, and I think it's like the dumbest thing and I can't believe they teach this. I just really don't. This is what they teach in universities, that if everyone thought it would go up 20%, then they would already arbitrage that. They would buy it now because it's going up by 20%. Therefore, it'd go up to 20% or closer to the 20%, and it would arbitrage out, right? And that opportunity is gone. But you know, if you buy houses, it will go up. I mean, oh no, you can't do that. No, you can't do it, because if it was going to happen, it would have already happened now. But that's silly. And to think, how many humans do you know that think like a machine? That never make mistakes, never get greedy, never get scared, never do things on a whim, never have a bad idea and act upon it, right? Like, oh my God, isn't like the vast majority of humanity like off their rockers? Like, I don't think I've ever met someone completely sane, have you? Just look around your family. Woo! Holy smokes. I can't believe these people know how to feed themselves, right? Well, apparently that guy does. Holy smokes! So yeah. So I don't know. So what I'm getting at is either nothing's going to happen today, because that would be the logical thing, or someone's going to do something somewhere. Even if it's a bad idea, even if it's like, ooh, that's not so good. So what I'm telling you is, you have an opportunity in the next 24 hours to actually be the trader that you think you want to be someday. But the someday never comes, right? It's like telling your mom when you're a kid, yeah, you'll take the garbage out tomorrow. And then the next day occurs and she's like, you didn't take out the garbage. And said, Mom, I'll take it out tomorrow. But it's still today. I'll take it out tomorrow. Right? Like, tomorrow never comes. Tomorrow is an abstract, right? Oh, well. So I do a lot of motivational speaking and stuff at universities with college students, and I ask them, how many people would like to change the world, and how many people want to make the world a better place, and how many people want to do something, interesting, perhaps even amazing with their lives, yeah, and then like, so when are you going to do this? Like, when are you going to start? Oh, well, let me finish college first, and then I'll get my good job, and I'll make some money first, and then I'll get married first, and then I'll have 1 or 2 kids, and if they're both boys or both girls, you have to have a third kid to maybe try to get the other one that you didn't get, and then one day you wake up and holy crap, you're 55 and you haven't done anything with your life except have a lousy job and 3 kids that don't like you. And you're like, I was going to make the world a better place. Oh! Gee whiz. So, you start today, right? So today you have the opportunity to be the trader you would like to be someday, which is today. You should have been that person yesterday, right? So anyways, so really map it out. How are you going to behave as a professional foreign exchange trader with at least $10 million in your fund? Okay? Do it. Right? Do it or do not. That's it. That's it. Yeah, I felt Yoda there, so I switched it up a little bit, Alex, but I appreciate that. Okay? Well, Miles says he would be scared to make a move with 10 million. Well, probably leverage the way that you leverage your trades, yeah. Because you're like, holy crap. So if I had 10 million in my account, every trade I'd be making would be like 50 standard lots. Well, maybe you're over leveraged. Right? And I said, look, if you lose 2% this month, maybe that's okay. But 20%, you're fired, right? And you're like, oh my God, well, at that rate, I'd be making $258 million a year. Well, that could be a little bit over leveraged, right? That might be a little much, right? 250% return on investment per year might be a function of the risk you're taking, and I thought we discussed risk being bad. You see what I mean? Well, Marina says, what's a fair and reasonable risk on leverage on trades? Okay, good. So one thing I hear a lot is that I risk no more than 1% on a trading idea. Right? Okay, good. The average professional foreign exchange fund, or CTA, Commodities Trading Advisory Firm, in the United States, tracked by Barclays Hedge Index. So I'm talking about something specific. So you can go to Barclays Hedge and then either look at macro CTAs. I think they have some foreign exchange CTAs now. I haven't looked in a few years. Okay. And so you can get to the exact subcategory. And the average profitable month, or the average month on the best traders is 2% profit. So let's just say if you're doing a 1-for-1 ratio, let's say your average losing month is 2%. So that means you could afford to make 2 trades a month. Well, I like to make 2 trades a day, Wayne. Well, maybe your brilliant, I only risk 1% per trade is a little high. See what I mean? So like when your account's small and you need to grow it to get to the next level, fine. So we understand that, new traders are going to just, because unless you're rich now, which most of you are not rich, then you need to get rich first. So I guess you're going to assume and say, well, it's only $5,000, but my goal is to get it to 50 grand, and then I'll have some sort of outcome after that. Okay, fine. But you're assuming a lot of risk to get there. But do these numbers now. If you have 10 million, do the numbers. How many trades per day do you make? What's your winning percentage? And if you don't have good numbers, think about the numbers you would like. Okay? So what's 2% compounded over 12 months? Yeah, it's actually more than 30%. Okay? So 2% per month is great, isn't it? Yes, Miles. I'll accept 33. So 33% fund or 33% annual return is pretty good, right? Do you guys have bonds that are doing better than that? Is your mutual fund doing better than that? Like, are you guys investing your life savings in something that's returning more than 33%? Well, Goliath is only if you can perform consistently. Yeah, but most people in this room are trying for 10 or 20% per month. And they don't understand how ridiculous that makes them look. Because then they're going to go to their professional, investors and say, "Hey, give me 10 million so I can trade." And they're like, 10 million? Are you ridiculous? Right? Like, look at your trading results. You're so extremely over leveraged. There's no way I'm going to give you any money, right? All right? So that's what I'm saying. Most people don't understand that 2% a month is huge. So now you need to try to get 2%. Now, I'm okay, go for 5. Okay? Go for 5%. Let's just keep the numbers interesting. 5% per month doubles your account by the end of the year. Okay? So think of 5% now. Now you're attempting to be the greatest foreign exchange trader that ever lived. That's the idea, right? 5% a month. You're way over compared to the best foreign exchange trader to ever live. You're currently way over leveraged compared to that guy. Okay? Or gal. And then reverse engineer the whole thing. What's your lot size relative to your to what you're trading? So for example, at 5% a year, you're going to make $10 million profit for your clients. So let's say you keep $2.5 million for yourself, and the other $7.5 million goes to your clients. Now, of course, what you're going to do is say, wink, wink, nudge, nudge, keep most of that in my account. So in year 2, you actually have $15 million in the account, right? But anyways, can you live on $2.5 million per year? Okay. Well, what if you only have $1 million in clients? Can you live on $250,000 per year? Okay. You can. I suppose you'd suck, but I guess you probably could. So, right? So all of a sudden these numbers are amazing, right? But you only have 10 grand in your account. So that's why you're trying to make $1,000 a month. You're like, whoa, okay. But, so just now when things are a bit scary and maybe you're focused on things like, how am I going to make a lot of money tomorrow? It's the exact wrong thinking, and you're setting yourself up not just failure or risk today and tomorrow. You're setting yourself up to throw away your entire career because you're training yourself to think in exactly the wrong way. So you need to listen to your Uncle Wayne. Spend today, this afternoon, maybe instead of trading, bust out an Excel spreadsheet or a pen and paper, however you think, okay? And write it down. You have $10 million to trade with. It's other people's money. You can't just throw it around. And everything you do is being watched. Okay? And start planning out things like, well, what lot size is appropriate? What would you do? Okay, what is your goal per month? How many trades do you make? What winning percentage would you expect to have? Are you a 90% winner? You better have some giant lot size stop losses, right? Therefore, your lot size needs to be small. Or are you going to trade a lot? And only have a 55 or 60% win rate, but your winners are bigger than your losers, and you make a lot of trades, so you get diversity. So, what kind of trading do you have? Well, again, if you have lots of trades, your lot size should be small. And go through that and contemplate the way you're going to behave in the near future. So risking 1% of the entire portfolio on one trade sounds like a lot to me. Right? Miles says, what is the position size per trade of those that make 2% a month with $1 million? Well, that's a function of the type of trading. So again, the more trades you make, you're going to have to adjust. The bigger, right? So are you going to make a lot of, are you a putter or a driver? Okay. Most professional golfers putt at least twice as much as they drive, because some of the holes you don't even drive, right? So a swing trader, is going to trade less than a scalper most likely, and therefore lot sizes are going to differ, right? And then there's risk management techniques and all different things, and what's your strategy? Do you pyramid all your winners? So sometimes what I'll do is I'll spend 12 weeks building positions with the overriding goal of not taking profit. The only way I'm getting out is to be stopped out. Well, that's going to have a different strategy than spending the whole day scalping, right? So that's for you to design. That's why you need to sit down and draft a business plan. It was one of the best things I ever did in my foreign exchange trading career, was doing a planning retreat with myself. I spent probably an entire week, and as you guys know from old stories, spent a couple of days at the Ritz-Carlton in meetings with myself. I had it on my calendar and my agenda, right? I pre-printed agendas and stuff. It was really cool. And I came out with 2 years pro forma cash flow statements, and a lot of amazing things came out of that, right? I mean, it really did happen, and amazing things really did come from it. So like you're asking me, so what's the lot size? Well, I don't know what you do. What is it that you do? So you might want to think about it and say, well, I don't really know what I want to do, what type of trading strategy I have. Well, then you certainly can't sit down with an investor and explain to the investor what you do and what risks are associated with what you do. Therefore, you're not going to raise the money. So you should say, well, I should probably think about this. Just knowing that you should think about it is very important. And then second of all, maybe design different strategies. So like if I were a hedge fund talking to an investor, I could offer 3 different opportunities to this investor, right? You don't just sit down and say, well, I try everything, all right? Oh, multi-strategy, right? No, you can say, well, I have 3 opportunities for you. I have an ultra Japanese yen short fund. The only thing that this does is short the Japanese yen and look for the carry. And you say, well, the risk associated with this is I could spend 3 or 4 or 5 months setting up positions and maybe breaking even, maybe taking small losses. But if global macroeconomics is such, or the Bank of Japan acts in a certain way, we'll make a killing. But only in those situations. In other situations, so be prepared to slowly not succeed as we wait for the global macroeconomics or the Bank of Japan to turn our way. Therefore, my risk management strategy for this is to not lose more than 2% per month just for this Japanese yen ultra short fund. And therefore, what I'm going to do is buy dips at support and move stops to break even as it rallies up. And even if we are profitable, we're not taking profit. And then we'll pyramid when it goes. So I could not do well for several months, but we're going to do it in such a way where it shouldn't build up, okay? And maybe we'll lock in some small profit to offset the previous month's loss, but the overall, that's just risk management. But the overall goal is to be long-term long, okay? And then, so you go through that. So, under those circumstances, here's how I project things to be, and so on and so forth, right? And then you say, well, but I also have this other opportunity. This other fund acts as a short-term fund only. We call it, ultra liquid fund. That sounds nice, right? Ultra liquid. We just scalp. That's all we do. Scalp, scalp, scalp. We don't hold positions overnight. We don't, we're not betting on the long term. We're just looking at volume and volatility in the here and now. Okay? And this strategy is different. We do this, this, and this, and this, and this, and here's the risk, and here's how we manage the risk, and if things go well, this is what we look at, and here's how we probably will do in the near future, and so on and so forth. So down the run, you might have 2 or 3 different opportunities for investors to pick and choose from. What you need to do is be able to break that apart and ask yourself, what type of trader are you, or what kind of trader should you be in the next 12 months? Over the course of the next 12 months, what do you think is likely going to be most successful for you? And then start planning that out. And then you say, well, Wayne, I don't know if I'm a good swing trader or a scalp trader or a spot trader. I just kind of wing it on all 3. Well, hence, you've just identified another problem. You don't have a strategy. You see what I mean? So why don't you have 3 different trading accounts, right? Go to TradersWay.com, open up 3 demos, okay? One's a spot trade, just call it your typical day trades, right? Another one is swing only. Maybe you only make trades on Monday and Tuesday, and maybe you only take profit on Thursdays or Fridays or the following week. And then your third demo, whatever, scalping only. And then find out which one works better. And then over the course of the next 2 years, maybe you'll see some seasonality in each of the trades. And then you can take that into account on how you would manage that risk. So you might find your carry trades are down in the first quarter, up in the second quarter, flat in the third quarter, up on the fourth quarter. And then the second year, the same pattern happens. And you say, well, that's interesting. So in year 3, you take advantage of your own seasonality. And so in season 3, you would expect your results to be a lot better. Because it just might be more sideways and up and less down. Jobless claims just came out. They're quite good. Just a heads up. Well, we're testing a weekly M4. Oh yeah, beautiful spot for the Dixie to go up. Gold is on the weekly cluster too. Cool. So anyways, guys, what I'm trying to say is today's the day, the first day of the rest of your life. Start acting the way you want to be. Right? One way you can summarize my book is to fake it till you make it. One thing I say is, is to pretend you're a professional Forex trader now. So take my advice, give yourself $10 million of other people's money and pretend you can manage it. And do the things you would like to think you're capable of doing. And maybe it's not this year, maybe it's next year, the year after, maybe it's 15 years from now. You say, oh, I remember doing that. I remember pretending. I just totally forgot I was pretending. I just was behaving the way I wanted to behave, what I thought was the right way to behave. You see what I mean? You stop reacting to markets. You stop chasing price. You stop letting your losers run. You stop doing this, but you start doing other things. You actually read papers written by central bankers and the IMF and the BIS and so on and so forth, right? You started researching fundamental trends and economics and so, all these different things that you just, wow, I just totally forgot. I've been just faking it. I guess this whole time I've been a professional foreign exchange trader with patience and discipline and strategy. Would CTA help you become better? Absolutely not. A CTA won't teach you how to be a professional, and it doesn't teach you a dang thing about the foreign exchange market. So I once was at a luncheon with a bunch of CTAs at the headquarters in Chicago for the National Futures Association. And we did a morning course about what you can say to your clients in like newsletters. And here's the answer. Nothing. Okay? And then the president of the National Futures Association came in and spoke while we were eating lunch. So I got my little ham sandwich going. And he comes up and he starts talking about how good the NFA is and all these different things. I'm like, Then he says, I'll give you an example of how our policies are so good. What was the name of it now? The bank that blew up back then. Oh my God. The one that almost took FXCM down. What was the name of that bank or broker, whatever it was? Oh man, it's so long ago I can't remember. Does anyone remember? It's just slipping my mind. So, anyways, there was a bank that failed. No, way before Man Financial. Oh my God. And I just can't remember it. And even I think it's where FXCM held most of its accounts. No, way before that, guys. Come on. And anyway, so the bank failed and almost took FXCM out with it. Oh man, it's been so long. That's it. So anyways, it's been so long. I've been around that long, right? Refco, that sounds better. Thank you, Roger. All right, so he's like, so let me give you an example how awesome the NFA is. And I'm eating my ham sandwich. Okay. Refco went under, nobody lost money. And I went, what? I'm like, whoa, dude, that's weird. And he keeps talking about because of the NFA and because of that, and Refco went under and no one lost money. And I'm like, whoa. Hey. And I got my hand up. I'm like, over here. And he's like, yes, that guy over there. I stand up. I'm like, my name is Wayne McDonell, and I'm a foreign exchange trader. And along with my fund, I also oversee a community of thousands of foreign exchange traders around the world. And I know for a fact that clients lost money when Refco went under. These foreign exchange traders had accounts with their money in it. Refco went away, their money went away. And he said to me, oh, that's Forex. That's just over the counter. And then went on with it. And I said, holy crap, this guy represents my entire industry? And he laughed like, Forex? Yeah, that's over the counter. Screw him. I don't count that. They lost each individual. I know people that lost $10,000 in some accounts or even more. So we're talking about millions of dollars were lost. And he's like, but that doesn't count. It's only Forex. Who cares? I don't even count it. You know what I did? I put my sandwich down. I grabbed my binder, I went zip, and I walked out of the room in front of the president of the National Futures Association. Like, F you, buddy. Yeah, and he managed our industry. Holy crap. I couldn't believe it. What did you say to me? That I don't count. My clients don't count. You son, and I'm in Chicago. I'm like, I flew all the way to be here. Why am I here? Why do you regulate my industry if you don't give a crap about me? I was so like insulted and flabbergasted and pissed off, and you gotta be kidding me. And I walked out. That's it. I'm out of here. Yeah. And our relationship went downhill ever since then. Holy moly. I was just infuriated. Good thing I left my ninja sword at home. Oh. Right? Just, I couldn't believe it. So No. All right. So Alex says, no. The CFTC, the Commodities Futures Trading Commission, is a government agency. It oversees the foreign exchange trading industry, the futures industry, and I think a couple of other things. Right? The CFTC has government powers by law, okay? Has the legal authority to regulate and oversee. And then, in some weird, magical fashion, delegates some of its authority to the National Futures Association, which is, you could just think of it as a club of a bunch of, there's some Forex traders. By the way, their fees are higher than other firms because the NFA, the National Futures Association, treats futures people nicer than they treat Forex because they're like, we don't want to regulate Forex, but, well, now you have to register as a futures trader, even if you don't trade futures. You have to have disclosure documents that reference futures, even if you don't trade futures. And then, if you are a Forex person, you also have to pay more money to designate yourself as a foreign exchange trader, and then you have to do all this other crap and pay extra money to be a Forex trader, and yet follow all the rules and regulations of the futures stuff, which you already told us has no pertinence to what you actually do, and therefore you're going to confuse the hell out of your clients. Great. But, so the NFA is like a club of futures traders that have some people that trade Forex, but they're they're like bastard stepchildren, right? Okay, but the NFA is just a club. It's an association, not a government organization. A club that regulates itself. That's why the president at the time was like, we're so good, we regulate ourselves and we don't have any problems, and no one's ever lost money when the NFA's been around, which of course is obscene. I can he even believe that's true? Maybe he does. But anyways, but they're not a government organization. They've just been delegated authority because the government doesn't want to do it. So the CFTC delegates some authority to the NFA, and the NFA, as a club, self-regulates itself. But I remember sitting in my office explaining the foreign exchange market to the auditors who are auditing me. And I'm like, well, that's not really how it works. And like, really? So we're talking about things, I'm like, and of course, that's like arguing with the prison guard, which made things a lot worse. So I'm like, oh my God. So have fun with that, America. Judith says, why don't you educate him? Well, in the middle of his speech at a luncheon in the NFA headquarters is probably not the right place to do it. All right. And I don't know if you can argue with someone with supreme authority and power over you. Can you? I mean, is it a fair playing field right off the bat? Well, Miles is a waste of time. Almost dangerous though too, right? Because you'd think for him to admit that he's wrong would be to say that his organization is not ultra power but almost worthless, and therefore his own job's in jeopardy and his own reputation's in jeopardy, and his career path to go on to bigger, better things would be taken away from him, or he could just crush me and put me out of business. Okay? No, Sally Pup. Oh, Sally. I wish that were true. So I thought of starting like a lobby organization for the foreign exchange market, but I just don't have time for all this stuff. See, the problem is that every time I walk into an organization, I'm like, I need to take this whole thing over. So I stopped going to things like, oh, I'm telling you. Every organization I walk into, I'm like, I need to take this thing over and clean it. All of a sudden, I'm like, I can't even go to Boy Scouts. I can't go to soccer teams. I can't go to my community's board meetings. Every time I walk in, I'm like, oh, these people need me. I can't. Now I just like, that's why I never leave my house. The world is too scary because the whole thing's screwed up. So I don't know. How did we get here? Oh, yeah. So the market's moving, or maybe it's not moving. It's probably irrational, but it might be rational. This is a great time for you to do a business plan. So if you were going to trade today, you have some time in New York. There's not a lot of time left. We have some news really in the next hour or so, but I would say in the next 2.5 hours, certainly 3 hours, your trading should almost come to a complete halt. If you didn't short the yen in Asia, if you didn't short the yen in London, and if you didn't short it 45 minutes ago, I don't know what you're waiting for. So all that's come and gone. We have a little bit of volatility that's going to come in at the 9:30 hour, and then there's like news at what 9:45 and 10 o'clock. So by 10:30, 10:40, you should be done for the day. Just shut her down. Okay? And honestly, if you make a lot of money trading tomorrow, on the long run, no one gives a damn at all. If you were a professional trader and people were watching your stats and you did well tomorrow, no one would really care because it all washes out on the long run. It all averages out. And if a good month is welcome, but what people really want is low volatility and steady returns. So if you did 10% return tomorrow because you just crushed it, really people don't really care. What they want to see is 2% per month over and over and over in all market conditions and all situations. Sometimes you have a 3 or 4% month, but these big months where you have like 10, 12, 15%, it kind of scares people because you need to be able to explain why you did it, and it wasn't that you took larger lot sizes or you jumped in a market that was just going ape crazy and you caught the right moves. It's better to be able to explain it and say, well, we did spend 3 or 4 or 5 weeks building these positions based on our models and our analysis, and things went our way. And, as the market was moving, I had 27 positions open with no risk because all of my stops are at break even. And we were profitable in all 27. And then the market took off, and then we had a great month. They're like, oh, okay, so the reward was not a function of risk. It was the function of strategy. Yeah, okay, good. But to say, well, Brexit came out and I did, all these different trades and it was crazy. And no one really actually wants to see that. And even if you had a big month and you could explain it, over the course of 3 or 4 years of trading data, it's not really going to stand out that much. And if anything, it's going to get people looking at the wrong things. Now, if you lost a bunch of money tomorrow, your career is over. Well, Alex says that's why he scalps. It's okay, but it's not the way to make real money, Alex. You'll never get rich scalping, in my opinion. Okay? Why not? Well, we're out of time, and that's a long question. But because you never have any home runs. So, Alex, can you scalp 10,000 pips in a month? Not $10,000. Not 10,000. I want pips. Can you? No, it's a real question. It's not even an exaggeration. Can you scalp and make 10,000 pips in 1 month? You're saying with large lot sizes? No, it's a yes or no question. Can you make 10,000 pips? I don't care if it's a micro lot per trade. I don't care. Can you make 10,000 pips by scalping? Because I've made 10 and 15,000 pips per month. Not every month. Well, I've had months of 10,000 pips or more. Not from scalping. No, not from scalping at all. I don't think you can. What are you making per trade? If you made 25 pips per trade, right? 100 traders is 2,500 pip. So you need 400 trades at an average of 25 pips profit. But I bet you're not making 400 trades a month. Or if you are, some of them are losers, right? So you might need to make 1,000 trades in a month. Well, right? That's 50 trades a day. Okay? It's possible, but, but, and that's a big but. So just always put it in context, right? So Peter says pips ain't money though. All right, good. Next question. So if you can't make 10,000 pips, what are you going to do? Well, what you're going to do is try to make 1,000 pips a month. Now, for a lot of you guys, when I say 1,000 pips a month, it just blows you away. Like, oh my God, I can't even conceive of 1,000 pips a month. Well, therein lies another problem, right? But so what do you do now? Right? Are you increasing lot sizes and all that kind of stuff, right? So Alex says, standard lot, 2,500, you can live on that, and it's harder to make, all these different things. The secret to success, if you do want to get filthy, stinking rich, is assets under management and lowering your risk. I've told you guys this story before. We're already out of time, so I'm going to cut this short. But if you can just produce the 2% a month, I don't care if you're doing it with micro lots. Okay? I don't care. Just do 2% per month with the smallest lot size you could possibly trade. And do that for 3 years. Okay? That's it. Just sit down every day, do your trades, every week do your swings, every opportunity do your little scalps, do your little day trades, sell in the London Open, cash out, just do your little job, and really, really small lot sizes, and just consistently do the 2 or 3% per month. That's putting you somewhere between 25 and 50% return per year. Do it for 3 years in a row with very little volatility in your overall portfolio, so that you can show clients that you're doing this with virtually no risk. As little risk as possible, and not big swings. You don't want to see -10 plus 20 months. No, that's volatility. That's very bad. Just every month, it's just you're like a machine. You do that for 2 or 3 years, and you will become filthy, stinking rich. Money will rain out of the sky for you. And crowds of clients with millions of dollars will carry you through the streets. And young, innocent girls will be throwing flowers at their feet as they carry you on high. Bet you can't do it. Oh, Wayne, I can't put 3 years in. I can't, 3 years, Wayne. That's like forever. I can't do that. Well, maybe therein lies your problem. course it can be done, Gorilla. Okay? So people are focusing on turning $1,000 account into $1 million. Okay? See this stone I hold on my desk? Fool's gold. See that? Fool's gold. So put $1,000 in your account, or $10,000 if you got a little more money. And your goal is to make, let's say, 5 trades a day. That's 100 trades per month. And the 100 trades per month are going to produce somewhere between 2 and 3% return. So how much money are you trying to make? Okay? If it's $10,000, you're trying to make $250 a month. And you're like, Wayne, I can't live on $250 a month. Yeah, don't take the money out. And the next month you'll have to make $258 per month. And the next month you'll have to make $261 a month. And then the next month you're going to have to make $263.50. But you show consistency over a reasonable period of time where market conditions have changed once or twice, and every time the market seems to change, you are a bastion of consistency. Never taking risk, seemingly, right? And then, with your track record of success in hand, something that could be audited, something that could be seen and touched and felt and smelled and analyzed. So like you need your stats and have every single trade documented so that someone could run the report on an Excel spreadsheet and apply their own models to your data so that, you know, because a sophisticated investor has their own modeling. I had this one fund in London. He's like, I need this broken out by day, and I need to see this particular stat per day. And I'm like, well, I have it there per week, which is ridiculous because most people only want it per month. So I've done it per day. And he's like, or per week. And he's like, I need it done per day, and I'd like to see it by Monday. And it's like a Friday or something. I'm like, whoa, whoa, whoa. That's complicated, and we're going to have to go through, 20,000 trades. And so I'm going to have my, my analyst go through it over the entire weekend. And he's like, yeah, Monday will be great. So I'm like, whoa. So I call my analyst guy. I'm like, I need this by Monday, and I need you to go through all 20,000 trades and break it out per day to give me the stat. And he was like, holy smokes. He's like, okay, well, I'm going to have to work day and night, and I might have to bring in a helper. Like, do whatever it takes. But yeah, so they look at you this way. Of course not, Alex. All right. Yeah. So, anyways, you need to be. Those stats matter, is what I'm saying. Okay. So, just be legitimate and start now. Start today. Start the Monday after Brexit. Whatever. And focus on that. It's like me, I'm in school. I calculated, I have 1,500 days to go, and then it's over. Whoop, whoop, whoop. You only have 1,200 days, and then you'll be filthy stinking rich, or at least have the ability, the platform, the foundation to accomplish any simple little financial goal in your life. Now, at that point, you still need to raise the fund, but you totally have that as a possibility. And then once the fund is raised, you need to do it again in another 3 or 4 or 5 years. But you're on the path, and all your silly little financial goals go away, like the kind of car you drive or the house you live in, or all of that is just like, what is that? You think about that? You care about your watch? Really? It's a Rolex? It's like, really? Is that? I mean, anyone could buy a Rolex. There's not, right? All of a sudden, it's just like whoa. That's what you do? That's what you care about? right? All that just goes away. And you're like, huh, right? You know what's really weird? Your outlook changes. All of a sudden, like, the meaning of life changes because we've been trained to, like, worry about these things because we're all factory workers making someone else rich. Then you get your little house, hopefully close to the factory, except now we're so poor, the factory workers don't even work near the factory or live near the factory. When I was in California, I remember I was getting my tires on my car changed. I'm talking to the tire guy, and somehow he says, oh, he lives like 3 hours away. I'm like, you live 3 hours away? And he's like, actually, all of us live 3 hours away, and we commute together in a van. He's like, that big van over there. The 8 of us wake up at 2:30 in the morning to drive to work for this crappy job here to change my tires. I'm like, you what? You think he makes a lot of money? But he has to live 3 hours away to have his lousy job. It used to be when you worked at the Hershey's chocolate factory in Hershey, Pennsylvania, you would build a whole town, and the whole town worked at the factory. Now you can't even afford to live in that town. You have to commute to your stupid jobs, right? It's like we've been trained to have these, these silly little, trivial little goals, right? And all of a sudden, once you get past that, you're like, wow, now what do I do? Right? Now what? Let's see. Went on the cool vacation, right? Bought a nice watch, have a super awesome car, bigger house than I could possibly need, right? Kids are going to a good school, right? Check. Is my TV big enough? Yep. Now what the hell am I supposed to do? And that, my friend, is the interesting question. I'll see you tomorrow. I wish the best for you. Peace on earth. May the pips be with you. May our profits be above average. Today is the day to be the person you want to be. Remember, perception creates reality. So perceive yourself as the person you want to be, and you'll actually be that person. Start now. Greatness, now. See you tomorrow. Thanks for being on my team.